Come to Remora TC to trade like a shark and not get eaten by one. Let's school together to protect and grow our money. Hi everybody, it is Sunday, May the 4th. This weekend's video is going to be a bit longer than usual because I'll be on vacation this week. It's likely that I won't have the time to make a video or two, but I will attempt to put a few postings out there in the community part just to let folks know what's going on. In this video, I'm covering essentially 10 tickers, so it's a long video. The last ticker is Microsoft. We haven't looked at Microsoft in over a year. I do have a subscriber who is interested in some analysis on Microsoft, especially with the huge move this week that Microsoft did. So we want to know if it's time to buy back in or if it's time to lighten our exposure. So let's get started. We've got here SPY. That's the S&P 500. We'll review that first. And I made some annotations here just because for the sake of time in the long video, this will help us get through the content more quickly. If you remember from my prior analysis, I talked about this sort of retest of the purple trend line from above. So price moving up, back down, hit the trend line and bounce towards the 200-day. And indeed, that's what price is doing. So to make the chart more legible, I'm going to delete these arrows because that was the prediction. And indeed, this is what price did. You can see that the gap fill here has already been completed. So I'm going to remove it just for the sake of cleanliness of the chart. We can also see that the upside move, when I made the prediction, was here on this red candle. This was on 28 April. That price would likely come up to the 200-day here. That's about a 4% move. I'm going to remove this now. There's not much left, okay? So for those of you who are wanting to, buy in to go long, there really isn't much room for you to do it. So my suggestion is to really stay out of the trade. Don't even buy it here. Don't go long. In fact, the 200-day is here. My prediction is annotated right here. Up here, you can see it. I predict a rejection at the 200-day, and likely price will come back down, okay, to this trend line support. So that's about a 3% down. Now, really, the target is this gap fill down here. Okay, so it'll bounce around here, but eventually it'll come back down to the gap fill. And the reason is based on the RSI. So if we go back, take a look here on the left, you can see a buildup of bearish divergence here, quite a long time, from December to middle of February. So that's a lot of energy to unwind. The sharks are unwinding. And again, at this zone here, there's no bullish divergence. Okay, price and momentum are in agreement in that it's just price action. It's retail investors. It's the fund managers who are just chasing price. But we're staying on the sidelines, you and I, and we're expecting this movement here. So a rejection up here, price coming back underneath the purple trend line, and gap filling down here. So I'm going to actually annotate the gap fill here like this. Okay. All right. So that's the SPY. So be careful this week. Don't buy in. That's my suggestion. Switching to technology with the triple Qs. Triple Qs, the behavior is the same because the SPY is made up of a lot of technology stocks. For the sake of cleanliness again, I'm going to remove my prior prediction of saying that price will go up to the 200-day, and indeed it has. You can see that. Okay, so I'm going to get rid of this and get rid of this. Yep, so again, prediction is rejection at the 200-day, coming back down, bouncing around. Okay, likely fail. And check out the gap. Okay, I'm going to move this over just so we can see it. I'm reminding everybody of this magnet down here. Okay, right here. This is a magnet. So eventually the price action will move around. It'll bounce. It's not going to go all the way there right away. That's just the way it is. It'll zigzag up and down, but I feel it's going to fill the gap somewhere. For now, we're just going to put it right here at 423 as the as some support. We'll have to see what the sharks do, but we can already see the sharks did their signal here, told all their buddies to sell. And that's what it's doing. This is just a retest of the 200-day from underneath. I don't think there's much more momentum upward past that. Yeah, I doubt it. That's my prediction. Okay, that's triple Qs. Let's switch over to the FTSE. This is the UK index. This one's action is a little bit more to the upside than I expected. In fact, I thought that the 200-day here would have provided sufficient resistance. But instead it did a little breakout. You can see I made this annotation here, downward trend line. Price came above it. It looks like a big green candle here on the Friday, this past Friday. But in fact, from a volume standpoint, if we look at the down here, this volume indicator, it's only 79,000K versus, whereas on this day, this is the selling day, this was 514K. So the buying isn't huge, right? This is part of my thesis of how I trade. This is the retail investors buying it all up, and the middle-sized fund managers that don't know what they're doing. It may come up, here's my prediction, it may come up and attempt for new highs. All-time highs here, I put it right here, all-time high is the top of this candle here. So that's, oh yeah, you can see it here, 89.09. So I may test 89.09 right here at the trend line, this purple trend line, get rejected. Okay, so that's my prediction for the FTSE. Not much upside. Most of the charts don't have a lot of upside. A couple of my other tickers do. Okay, EWG, this is the German market. German market, my annotation, you can see it here, was that this trend line right here would provide overhead resistance. That's why I put this little red annotation, pink annotation. In fact, it broke through, but it did so and continued to create divergence, okay? There's a lot of divergence in the German market. So my annotation here is all-time highs. They'll attempt it. Let me move this up here so we can read it. There. So they'll attempt all-time highs. But my prediction again is lower prices. It'll be more divergent, whatnot, but it'll come back down. It's about a 7% move here. And really, the 200 days down here, okay? I'll just pull this over a little bit because it'll be like out here. 200 days there, and the price will come down or retest it. So if you're, wanting exposure to a foreign market like the German index, I wouldn't do that yet. Okay, sharks are going to be selling, and perhaps if you wanted to join their selling, then this might be an opportunity for you, especially underneath this line here, this trend line here. Okay, let's switch over to emerging markets because that's the narrative we've been hearing about. You can see that my prior prediction was this red annotation here, that 45 zone would be resistance, overhead resistance. But in fact, they gapped it. They made a big gap and they're trying to fill this gap. So let's zoom into this gap a bit just to show you. So what is likely going to happen is price will come up and hit this top of the gap line. That would be resistance. Let's just make it red. Okay. And get rejected. So they filled the gap there. The highs in this, what you can see on this chart here, the high is right here. Okay, at the top of this red candle, 45.42 up here. I don't think it'll get there. So we'll watch it. My prediction remains, because there's no bullish divergence here. This is just price action, retailers, middle-sized managers. They're just buying. What's going to happen is there's going to be another gap fill here. There's a big gap here. Okay. And price will, there's not much upside, so I'm just going to annotate it like this. Fill the gap, and perhaps, actually I'm going to go back all the way down. Okay, because we can see that the EWG is very gappy, so we don't want to draw every gap. I don't want to do that. It makes the chart too messy. We want to find the wider gaps. So this is the wide gap that'll get filled. The 200 days here. Let's annotate the 200 day. 200 day. Let's go like that. And okay, so lower prices for emerging markets. So yeah, don't get sucked into that narrative of switch out of the US markets just to buy emerging markets. It's not really a strategy. They're just switching. It's like saying, hey, today I'm eating apples, tomorrow I'm going to eat bananas. Like, it's not really you're not really diversifying the way that you trade. Instead, you're just buying different things. That's really not how I recommend trading. Okay, so that's emerging markets. Let's switch over to gold. Everybody loves gold, GDX. My GDX prediction, yeah, it's right. It's been right. I said overhead resistance here, okay? And sure enough, it took place. I'm going to delete some of this because it's just makes the chart look messy. Great. And then now, I also said it'll come back down to this purple trend line, and sure enough, it's doing that. You can see on the way down, it filled a gap here. Okay, gap filled, yep. Came down further. I'm gonna get rid of this one too. A lot of gaps there. I filled this gap, fine. Great, so where are we now? We're here. So my prediction remains the same. Further low prices go down to this purple trend line. And let's see. I'm not discounting GDX and gold as a bearish long-term move. It's possible that there could be a bullish divergence coming up, but I don't see it yet. So we'll just kind of watch it. But right now, it's not the time to buy. In fact, we're right in the middle of these two price points here, the $50 one here and the 45. You know, anytime you're in the middle of a range of prices, right, then don't buy or sell. It's foolish because you don't have the price level to give you either support or resistance at the top. Okay, so right now just wait. I mean, if anything, take your sell with the sharks up here. That would have been a nice move because you have the bearish divergence here. They already told you to sell. They already told their friends to sell. Okay, so their friends started to sell. All the sharks got together. All right, so that's GDX coming down to the purple trend line. Switch over to Exxon Mobil. This is the oil play. This is one of my few long calls. If you remember back in this spot over here in the middle of April timeframe, I said, hey, good opportunity to begin buying because the signal that the sharks gave down here was to buy. They told their friends, come on in, guys. It's time to buy. Bought it up. My target was up here through this gap fill, then to the 200 day. I did notice, and I talked about it in my review on, let's see, when did I review Exxon Mobil? It was on Wednesday the 30th. Okay, so Wednesday the 30th, I talked about it. Wednesday the 30th was here on this red candle. So I said, hey, on this red candle, you know, some people might start to panic. If you got into this trade, like I suggested, as a, you know, I'm not an investment advisor, you know that. But I said, hey, My prediction was prices would go up, that I wouldn't sell myself unless it closed underneath this 104 line, and it didn't. In fact, it held. So my thesis remains the same. Upward movement for Exxon Mobil. My target still remains the gap fill at least up to this 112.50. And really, the 200-day comes in play. And we'll see how it behaves at the 200-day before we talk about whether it tries to gap fill up here at the 118 space. Okay? So, all right, that's Exxon Mobil. The trade is going well. Next up is MicroStrategy. This one, if you recall, I totally missed the long trade. I wanted to buy it at this spot down here at the 200-day because I'm greedy like that. I didn't want to buy it here where I thought it would get rejected. So it's all the way up here now. What I did say was, in my last review of MicroStrategy on Wednesday the 30th, checking my notes here on the side, Wednesday the 30th, I annotated this red line going across here. This is at the 396 zone. I said, hey, that's overhead resistance, and look what it did. Okay, so Wednesday the 30th was right here, which is this green candle. So on this green candle, I said likely this red line that I drew on that night would be resistance, and indeed it has been the past 2 days. So Thursday came up, attempted to go through. That's on earnings. Earnings plays are really difficult to predict because we don't know what the sharks are going to do. So I try not to focus on earnings results. I try not to look at fundamentals. Don't read income statements or, price earnings ratios and debt equity ratios. None of that. Okay. Because there are plenty of professionals out there that can give you that information. Instead, I focus on the data, the chart, and the price and the momentum movement. So here, resistance, as I said, I think it will still play that way. Now, it's possible, it's always possible they'll peek their head above it, but you can see here in my annotation, I still predict sharks are going to begin selling in this area and price will come down. So from this red line down here, this red price point down here, gap fill, it's about 15%. MicroStrategy is crazy volatile because it's a Bitcoin play. I'm going to just extend this line real quick. Okay. And, this gap fill is no longer in play. Let's take that out, clean up the chart. Okay. So it's coming up to, RSI, almost overbought zone. But you can see that my prediction is still lower. All right, that is Bitcoin. Let's switch over to Nike. This was a good trade. Okay, so I last talked about Nike on Wednesday the 30th. Let's see, Wednesday the 30th is here on this green candle. But if you remember, I talked about Nike going back to Wednesday the 23rd. Wednesday the 23rd is here on this red candle. On this red candle, I said price will come up, likely come up, come back down. This would be a lovely entry. Hence, I drew this downward curvature here and put this green line here. But myself, I actually took the entry here early. I'm going to delete this. The play is the same. My prediction hasn't changed. Nike has bullish momentum that was established here in April. You can see it here. Okay, bullish momentum. This is just price action. In fact, if you got it down here, that would have been a lovely, lovely, lovely trade. Let me delete this arrow because it's kind of messy. The target of this gap fill remains in play. I haven't changed that. In fact, I'm still, I still feel it's going to gap fill. And it may even get up to this upper trend line. Okay. But right now, from where we are, where price is right now, to the gap fill, it's about another 10% move. So my entry, let's see, my entry was about, I don't know, maybe it was here. All right, so not huge. Up, I'm not up a lot. I'm up maybe, yeah, not even 2%. That's fine, but my target's the same, gap fill. So that'll be an 11% move. And then we'll see. We'll see what happens. Okay, that's Nike. I hope you got into it around here, down here. That would have been nice. You would be following along nicely. Switching over to the last one, Microsoft. I haven't looked at this in over a year. I have a subscriber who's very interested in it, so let's review it. I'm going to zoom out for us to the weekly chart just to give us a lay of the land. Then we'll come in and look at my annotations. Yeah, the last time I did Microsoft annotations and review was back here in this time frame of March, April last year. I'm going to delete some of these annotations just to clean things up. What you can see, and this is really important, I want you to see it right away, is the divergence in price here, in momentum, momentum versus price. So you can see, yep, other sharks got together and sold. And this price action coming back up is, is just retail investors and middle-sized managers. I mean, this line here that I've drawn, I'm going to make it a little bit thicker, make it a 2. It's a black line. You can see that price has come up, right? So the selling here came up to retest, and it was resistance, overhead resistance, came back again, and overhead resistance again. And then here we are. Let's zoom in. You can see 2 gaps, an A and a B gap. I made that designation so it's easier to discuss. Let's first discuss the A gap. Okay, so ignore the B gap for now. The A gap is, so on this date here, this was January 29th, and on the 30th, big gap down, and then sold down a little to here. So create this big gap. The past couple of days, this was here, this is May 1st, Thursday, and then May 2nd on Friday, price came up and hit this upward trend line, and it's attempting to close the gap. That's just how gap fills work. They're just magnets. What you can see here, I put a double horizontal resistance line to say that price will likely attempt to get to the top of this gap fill. That's about 442.25 or so. Okay. You know, maybe you'll see a wick to go through it, but I don't think there's much momentum or energy to go past that. So to me, that's resistance. So my prediction, gap fill at 442, then sharks will resume selling. The selling will then get itself to fill the gap down here where the gap B is annotated. So it's like this, in fact. It's like that, a little bit further down, a little bit like that. All right. So if you are a long-term investor in Microsoft, say thank you. Thank you to the retail investors for pushing price up like this. You know, this was on earnings, right? So earnings were really positive. The news came out, very positive. Everybody bought back in. They're all excited. But you have your handy-dandy technical chart analyst here sitting across the video screen with you, informing you that you have overhead resistance, 1, 2, 3, 4, right? To me, this is the 5th resistance, okay? And there's no bullish momentum here. There's no sharks buying back in to help legitimize the move. Instead, it's the small players. So let them get eaten. My suggestion, if you're in this as an investor, long-term investor, wanting price to go up, I recommend that you lighten your positions because prices are coming down. You got a gift when price came back up. This was a really big move for Microsoft to move from this spot here to here. That's 10%, about, 10% all the way up here. So you got gifted 10% move, but it's not going to be there for the long while. So let me delete this here. All right, so that is the Microsoft analysis. Long term, well, because of all this bullish divergence here, bearish divergence, I think prices continue to go down. Okay, so we'll keep playing it until we find bullishness to buy back in, but I think it will be down here. It will come back down and retest this 349 zone, 350 zone, at the least. It'll take a while to get there, but it's coming down. And yeah, so this spot here, you can see these three lines I drew here, three support lines, 345 to 350. So that's like your last hold, your last protection, because then it's a big jump down, much bigger. So let's hope that, price holds here and we can build some upward momentum so that we can go long. All right, so those are the charts for this weekend. SPY, triple Qs, FTSE, German market, emerging markets, gold, Exxon Mobil, Bitcoin, Play, Nike, and Microsoft. Give me a like, subscribe, hit the notification bell, let your friends know. I'm up to 77 subscribers. Yes! What an amazing number. Maybe I can get to 10,000 soon. I don't know. Good luck with your trades. I'll try to put out some quick notes this week. I am on vacation. And as always, I'm not an investment advisor or a financial advisor. Have fun with your trades.